Good evening, everyone. Thank you for coming. We're going to give it just a minute as people file in here and we'll get started. Thank you so much for spending your evening with us. We appreciate it. All right. Good evening, everyone. Thank you so much for taking time out of your evening to come listen to us speak on how to use your IRA and 401k to invest in real estate. We give this seminar a few times a year, and it's always a very popular one. A number of us here at Marshall Reddick have used our IRAs and 401ks to invest in real estate, and Dimitri from Sense Financial, who's going to speak here shortly, has helped us set those up. And we have a number of clients every year who do this and use this tactic as well, and it's a really great way to be able to direct and utilize retirement funds in real estate investing. So without further ado, let's get started. Cool. All right. Marshall Reddick Real Estate. Who are we? So we're a full service residential real estate company, and we have 4 divisions here within the organization. So first and foremost, we are a real estate brokerage. We help people buy and sell their homes as well as investment properties. We average about 800 investment property acquisitions per year. We're also a property management organization. We take care of everything for the landlords, from leasing to maintenance, renovations, rent collections, so on and so forth, so that all our landlords need to do is collect a rent check every month. We currently manage just under 3,000 properties across our portfolio, and I'm averaging 2 to 3 new properties every day added. So it is growing. There's lots and lots of experience there. Our third division is private lending. We provide non-owner occupied real estate loans to borrowers doing fix and flips, new construction, and investment property purchases. And then our fourth division is mortgage investing. The same way you can own real estate and collect rent checks, our investors own mortgages and collect mortgage payments. So we got a number of ways in which our clients can invest in real estate with us. And again, thank you so much for being here. We appreciate it. So a little bit about me. Guy behind the mic right now, my name is Tyler Dagler. I've been a licensed realtor since 2017. I went to Clarkson for financial information and analysis and minored in portfolio management. So literally went to school on this topic here. I recently completed the negotiation mastery program at Harvard. I'm at about 50 plus transactions and 35 million in volume at this point as we sit. At this point, I've closed real estate in 13 of the 50 US states with a goal to get every single state before this career is over. So chugging along at that. And something I like to note is I currently have 103 5-star reviews across different review platforms. I can tell you until I'm blue in the face about my experience and my achievements for my clients, but having my clients say that in those words is always much more profound and valuable. So I like to point that out. And I was actually recently featured on the Icons of Real Estate podcast discussing the positive impacts of positive reviews for real estate agents. So we're really, really proud of all our reviews. And that's just me. For Marshall Reddick and Dimitri, if you Google or Yelp or Zillow us, you'll find hundreds and hundreds and hundreds of 5-star reviews from clients just like you who we've helped accomplish and achieve what it is you're looking to do. So we're in 16 major metropolitan markets. The markets outlined in green are where we have physical footprints. So I'm speaking tonight from our Orange County office, but we have a physical footprint office in Clarksville, Tennessee, and Nashville, all throughout Central Texas and Southwest Florida as well. Those markets are very specific based on investor-friendly markets with no income tax and growing and diverse economies. Great places to invest when you're looking at the long-term buy-hold strategy that Marshall Reddick preaches. And just to kind of tag on that, when you're purchasing investment real estate, whether you're using cash, conventional, or your IRA or 401k, it's very important where you invest. There's organizations all throughout this world that will help you invest in any single place that you might feel is a good investment. However, we've been in business since 1979. We've been doing this a long time, and we have found that these factors right here on this screen are really what you need to be scrubbing your investments against to make sure that long term you're getting a good return. And please don't feel like you need to write all this down. Everyone here will be receiving a copy of this recording after the presentation. There is also a question box off to the side. If anyone has any questions, please feel free to put them in there, and I will get to as many of them as I can at the end of the program here. And I'll be reaching out and contacting everyone again after the program, and we can dive into that stuff deeper. So before we get started, Dimitri is going to walk us through how exactly this process works. He helps hundreds of our clients every year utilize their IRA and 401k money to invest in real estate. But before we dive into that, I just want to give some examples of some properties that we're working on right now utilizing IRA and 401k investments. So I picked one property from each of our best investment states to kind of give you an idea of what we're looking at. So here's one in Clarksville. This one was recently just went through an entire rehabilitation and is completely turnkey and ready. Something like this will require about $87,000 in investments in order to get it going. And on average, forecasted over a 15-year hold, because we have found after doing this for, decade after decade after decade, that the best investments are typically held about 15 years. Once you get to that end of that 15-year mark, your maintenance expenses start going up, and you will also find that at that point you've made enough equity through the price appreciation and principal pay down of the tenant that you can often 1031 that investment capital into a better market and a better investment. Investments change over time, markets change over time, and our average investor holds it 15 years before 1031ing up into a better investment. And so these numbers are all based on a 15-year hold. So we're forecasting on average monthly income of about $230 a month year one. These calculations do not take into effect rent raise, and we raise rents every single year. But if you were to purchase this property and never raise rents over 15 years, you're looking at a profit of about $127,000, and that includes everything from depreciation, recapture, realtor costs on when you're selling it, closing costs when you're selling it, maintenance over time, vacancy over time, so on and so forth. If anyone here has not played around with our investment calculator online, please feel free to do so. You can also give me a call and I'll walk you step by step through how to use it. We've spent a lot of time and money working to create the absolute best and most accurate real estate investment calculator available today. And it is scary how close these numbers link up to the true results. So I would invite anyone on here to feel free to use that calculator, and you can use that for any investment in any state. You're just going to have to customize the details in there based on the investment that you're looking at. So here's another investment in our Cape Coral markets. This one requires $125,000 to get into, an average monthly income of $223 year one. In most of these markets, you can expect about $100 rent increase per year. So for future calculation needs. However, had you never raised the rents on this in the 15 years you owned it, through an estimated 5% cost on, or sorry, an 8% cost on vacancy and maintenance, the projection is a $202,000 profit. And again, at the end of these, what most of our investors do is 1031 exchange that profit up into a nicer and higher performing property. And over time, you're creating a real estate portfolio that will allow you to create serious independent wealth. And a lot of people, and I get this question a lot, people will say, well, that's only $200 a month in cash flow. I mean, what's $200? I'm looking for more. You find when you run the numbers that cash flow is really the glue that holds the deal together long enough for you to make actual money. If you're looking at a, a higher cash flowing, like a $500 a month property, okay, so it's $500 a month, that's 6,000 a year. On a 10-year hold, that's 60 grand. 60 grand over 10 years, not gonna absolutely change your life. But when you look at the appreciation and the principal pay down and that forced equity growth of a couple 100,000 over 10 years, that's where you're really going to make life-changing money, if that makes sense. And to end it off here, here's a property in our San Antonio market. Central Texas, the growth is absolutely incredible. I was out there a few weeks ago checking out some properties we were onboarding, and it's really, really exciting, and you can feel the buzz in the air, the amount of growth that market is experiencing. Their population is set to double in the next 8 years, so a really good place when you're looking for investment, because that growth is coming. It has started already, but it is still very, very much in their infancy. So in this property example, investment capital needed is about $88,000, an average monthly income of $207 a month on year one, and a projected profit of about $183,000. At this point, I'm going to hand it over to Dimitri to discuss how the process works for utilizing 401k and IRA money in order to invest in real estate. And then at the end of this presentation, like I said, I'll get to some questions, and my contact information is going to be in there. Please, everybody, feel free to call, text, or email me at any time to discuss investment options. And I'll be reaching out to everybody after this is over, making sure that everything was answered and if any clarifications need to be had. Dimitri, thank you so much for taking the time out of your night to walk our clients and investors through this strategy. We appreciate you very much.
Thank you, Tyler. Can you see the first, the title of the screen?
Yes.
Okay, awesome. Well, thank you guys for joining us. Thank you, Tyler and Marsh Reddick team, for inviting me again to speak on this topic. I'm very passionate talking about this, and without further ado, let's dive in. Here is my contact information. I will share this slide again at the end, but this is our main office number and my email. Feel free to contact us, and also I'll share a link to schedule a consultation that you can take advantage of, and we can have a free 15-minute one-on-one chat about your specific situation. Very quickly, a disclaimer that I'm not a fiduciary. We do not provide legal, tax, or investment advice. My specialty is self-directed IRAs and 401ks, and that's what I'm going to be talking about. And our mission here at Sense Financial is to help our clients obtain control and protect their retirement accounts. Proverbs 21:5 says that good planning and hard work leads to prosperity. And we want to come along your way because you are working hard for your money, and you want to make sure that your money is working hard for you. That should be everyone's goal, to achieve that, to become a passive investor, to achieve that point where you no longer have to work for money, but your investments and your assets working for you. I wanted to start off by showing you this example. Jason is one of our older clients.
Hey, Dimitri, sorry to interrupt you, sir. Currently on your screen share, you're showing, we just see the title slide on how to use your IRA 401k to invest in.
Okay, thank you for doing that. Let me see what is, okay, I'm stopping the screen share. Okay, I think I figured that out. Okay, can you see the slide now?
Cannot see it yet. We're seeing the home screen.
Hang on.
And that's how you guys know that this isn't pre-recorded. We've got some technical issues.
Okay, how about now? Still?
No. Yep, not seeing it yet.
Oh, what's going on here? Oh, you know what? Okay. How about now? Oh, hold on, it says stopped. So, okay, sorry about that. Hold on, let me just close everything else here. Um,
Yep, and I see you guys chatting away in the chat box. Yep, we're working on getting his screen shared up for you here, so we should be good to go in just a second. We apologize for the technical hiccup.
okay, how about now? Can you see Jason?
Nope, we can't. It's just
The,
showing the screen investing in real estate.
okay, 1 second here. Trying a few things here.
Got it. There it is, Dimitri. We're live. Thank
Okay.
you.
Okay, great. So you see Jason, right?
Yes, sir. Thank you so much.
Okay, awesome. Well, thank you guys for your patience as we were navigating the technical difficulties. And so back to the example, Jason is one of our older clients. He reached out to us because he had money in an IRA and a 401k. He had two retirement accounts valued about $135,000. He was losing money in the stock market, just like probably many of you experienced earlier this year, couple of years ago at the beginning of the pandemic, and then back. So that's how the stock market is going. It's going in cycles and very bumpy road. He did not want to continue to experience that. And he also was concerned about the just unstoppable amount of government spending and a talk that government potentially coming in and stepping in and touching private retirement accounts. So he was looking for alternatives, what he can do to protect his retirement accounts. And he found us online. He reached out to us, and after we consulted with him, we established a self-directed solo 401k, and he was able to acquire three investments. He purchased a rental property in his 401k, so his 401k actually owns this property now. He invested portion of the funds into his brother's private business, and then he also invested a remainder of the funds into real estate note. What Tyler was talking about earlier, you can do with Marshalledic actually. You can use your IRA or 401k and be the bank and lend money to other people. He, at the time, these are old numbers, like about 10 years ago, he was receiving about $1,000 a month in cash flow. It's probably more than doubled now, and his value total probably tripled, if not more, since then. So as you can see, pretty significant difference just on a day one, basically after the change and after acquisition of those assets. His portfolio was growing every single month, and he wasn't subject to the instability of the stock market. And that's what we do for our clients. And let's take a look at the options that are available for you guys. So there is basically three options when it comes to self-directed retirement accounts. It is a self-directed custodial IRA. There is also a checkbook IRA, and last but not least, a solo 401k, which is known as the ultimate retirement plan. Let's take a look at each one of those separately. But before we do that, just a general comparison to help you understand the difference between a conventional retirement account, what most of you have, whether it's an IRA or 401k with your employer or perhaps a 403b. It is held by the custodian. and custodian is the one that dictates the investment choices for you. And typically those investment choices are confined to the stock market. So stocks, bonds, and mutual funds. Those are the only choices for you. Here is just an example of a sheet. When I used to work for a company with a 401k and I was participating in that 401k, a representative will come and meet with us about once a year, will give us a handout similar to this one, and those were our investment choices. So just about half a dozen choices of some mutual funds. That's it. Well, if you switch to a self-directed IRA or 401k, your investment choice is virtually limitless. Here on the right side of the screen, you see just a few examples of what some of the most common investments. Residential real estate, you can invest in tax liens and tax deeds. Cryptocurrency, mortgage notes, trust deeds. You can invest in private businesses. You can buy real estate internationally. I do have clients who invested in Canada, in South America, in Japan, in India, in Europe, several countries. So you can do that. You can invest in private lending, again, be the bank, and you can invest also in conventional investments. So if you're sitting on some cash that is uninvested, perhaps waiting to accumulate more or looking for the next investment opportunity, and you're just sitting on cash, you don't have to sit on cash. You can put that in the stock market. You can buy some mutual funds with that. So you have the freedom to invest in virtually anything you wish. So let's talk about the first option. What is a self-directed IRA? It is a tax-deferred trust account that has been put in place by the government, which dates back to 1974. It is held by the IRS-approved custodian. And that's actually the key. The IRS custodian is the one that either opens those investment choices for you or closes those investment choices or limits those investment choices. And if you're like most people with conventional IRA at Vanguard or Fidelity or 401k at Schwab, then your investment choices limited by the custodian to the stock market, but the custodian that specializes in self-directed accounts, they don't have those restrictions. And this account allows you to invest in non-traditional assets. The majority of people out there, they simply don't, they're not even aware that this type of investment vehicle available to them. But it's been around since 1974, and it's been designed to help people like you and I to save, put money away for the retirement. Now, let's take a look how this works. This diagram shows you the kind of a flow chart. Step number one, you will open a new account with the IRS approved custodian. The custodian holds the IRA, and custodian is required for every IRA. You must have a custodian. Next, you will fund that new IRA with the qualified transfer or rollover. And you will move funds from existing IRA, 401k or 403b or any other retirement plan, qualified retirement plan. When you move this directly from one retirement account to another retirement account, it is not a taxable event, so there is no tax implications. You as the account owner, you direct the custodian what you want to do. So you tell them, hey, you want to invest in this piece of property, or you want to invest in this private loan, and a custodian makes that investment on behalf of your IRA. But the disadvantage is that you always have to go through a middleman. Every time you do a transaction, there is a fee. Every time you buy or sell the investment, there is a fee. So there's a lot of red tape, there are delays, and there is extra cost. For this reason, many people look for alternative options, and they choose checkbook IRA. A checkbook IRA is also known as the IRA LLC or IRA owned LLC because there is a special purpose LLC that is created with the purpose to be owned by the IRA. So IRA owns this LLC. It does require IRS compliant setup and operating agreement, but it allows you at the end to bypass the custodian. Remember I told you that custodian is required for every IRA. When you use the structure, you are allowed to bypass the custodian, and because you have control of the LLC checking account, and you are making investments and making all the transactions directly. So let's take a look how exactly that works. Step number one is the same. You open the new IRA with the IRS approved custodian that allows alternative investments. But more importantly, this custodian need to allow a special purpose LLC, which you will see shortly here. The same way you're gonna fund it with the qualified transfer or rollover. So not a taxable event, you're not touching the funds going directly from your existing IRA or 401k into the new IRA. Next, special purpose single member LLC is formed. You become the manager of this LLC. And as a manager, you control the LLC. The funds are no longer inside of your IRA. The funds are now inside of the LLC checking account. As a manager of the LLC, you have full control over the LLC. So you open LLC, you open a checking account for the LLC, and IRA custodian is instructed to purchase the LLC units. So all the funds from the IRA custodial account are now transferred into the LLC checking account. And as a LLC manager, you now have direct control over the assets and over the funds of the LLC. So if you found an investment property, you will make an offer in the name of the LLC. As the manager of the LLC, you will sign the purchase agreement, you will write the check for earnest money deposit, and then when you ready to fund that investment, you're gonna wire the funds from LLC checking account to escrow to purchase that property. The process will be very similar if it's a different investment, if you funding a note, for example, but it's gonna be, the flow is gonna be the same. As you can see, this structure allows you to have direct, or we call it a checkbook, control over your IRA. That's why it's called the checkbook IRA, because it's literally giving you that checkbook control. The benefit of this is obviously the control, so you're eliminating the middleman, or actually bypassing the middleman, and you're also minimizing the cost and eliminating the delays. Next, let's take a look at the solo 401k. Solo 401k is known as the ultimate retirement plan. It's kind of a Cadillac of the self-directed retirement accounts. It's designed under Internal Revenue Code Section 401, subsection K. That's where the name comes. And this plan designed specifically for those people who are either self-employed or own a small business without employees. So if you're a single owner corporation, then this plan is for you. It's not a new type of plan. It's just a regular 401k, but it's simplified because the only participants in this plan is the business owner and spouse. The spouse is also allowed to participate if spouse is eligible, meaning if the spouse is also working in the business and receives compensation for the efforts, then spouse can also participate. The increased interest in these plans was in 2002, there was a tax law change called the ECTRA, and it made all these benefits possible. And I'll go over that in just in the next few slides with you. But number one, before we jump to the benefits, let's talk about the eligibility, because this plan is not for everyone. This plan is designed again for those people who are self-employed or small business owners. So you have to meet two criteria. Number one, you have to have a presence of legitimate self-employment activity. This activity can be in any shape or form or type. And real estate agent, consultant, a travel nurse, you can drive for Uber, you can do it full-time or part-time, you can do it on the side. And then number two, if you have employees working for you that need to stay under 500 hours a year, because if they are working more than this number of hours, by law, you have to offer 401k benefits to them, and solo 401k simply cannot accommodate that. So as you can see, anybody can meet this criteria, because even if you're not self-employed, you can easily start some self-employment. There are benefits to that. So having business with full-time employees is the only thing that could disqualify you from participating in the solo 401k. And the benefits of being self-employed, because you just create an additional income stream, which will help you reach financial independence sooner, and it will make you eligible to participate in the solo 401k plan. There are other benefits as well, such as tax benefits, but we don't have time to get into that on this presentation. So let's take a look at the diagram how solo 401k works. Well, number one, you have to be eligible, as I explained, so there needs to be a plan sponsor. The plan sponsor can be any type of business. It can be a corporation, S Corp or C Corp. It can be an LLC, it can be a partnership, or if you're just a sole proprietor, that is sufficient as well. To give you an example, many real estate agents are sole proprietors. They work with a broker, but they receive compensation in their own name and their social security number. They report their income on a Schedule C. And you can actually you can fill in the blank. It doesn't have to be a real estate agent, it can be virtually anything. If you do have some sort of self-employment income, or you receive a income that is reported to you on a 1099, and you report that income on a Schedule C of your tax return, then you have legitimate self-employment activity, you qualify. Well, once you have that sponsor in place, and by the way, as soon as you start that business or self-employment activity, that makes you eligible to establish a solo 401k plan right away. You don't even have to show the income to begin with. You have to have expectations of generating profit for the business, but if you reasonably believe that you will produce income, then you can establish the plan right away. The plan is established, the plan sponsor adopts the plan, and plan and trust are created. In this structure, because solo 401k plan does not require a custodian, so there isn't a middleman here. There is no third-party custodian like you have to use one with an IRA. Custodian is not required with the 401k. That's why it's one of the features that make it very attractive. We create a solo 401k trust. A trust is the vehicle that holds assets of the plan, and you become the plan trustee. As a plan trustee, you have full control over the trust. Trust is a separate legal entity. It has its own unique name. It has its own unique tax ID number issued by the IRS to the qualified plan. And as a trustee, you control the assets of the plan. So you will open a bank account for a 401k trust. You can also open a brokerage account. And then as a trustee, you decide how you wish to invest the funds. So you can purchase investment property. You can use your 401k as a bank. Like in the example of Jason, he's done both of these. And all the income from those investments going into the 401k bank account. Remember, this is not your income. You're controlling it, but it's not, those assets do not belong to you. The income does not belong to you. And I like to put it this way. It's your future you asset and income, okay? Right now, while it is in the 401k, it doesn't belong to you. You control it, but you don't own it. Once you take a distribution from the 401k at a later time, then it's yours. So ultimately it is yours, but not yet, okay? And then all of the expenses for investment that are directly related to the investments, they must come out and be paid from the 401k account. So for example, if you're buying a property, rental property, and you need to pay property taxes, or you pay from the 401k bank account. You received insurance bill, you pay from there. You received a bill from the property manager for some repairs. You make a payment for that. If you wish to go and see the property to yourself, you just want to visit and it's out of state. This is one question people ask me often. Well, can I use my 401k to pay for the flight and the hotel if I want to go and visit the property? And the answer is no. You may not. That will not be allowed. That will be prohibited transaction because you're paying for the personal expenses. Those expenses are not directly related to the investment. Those will be your personal expenses. If you want to go visit the property, you certainly can. You just cannot use your 401k to pay for that. Only expenses that are directly related to the asset that your 401k owns. And by the way, I think we will have a few minutes at the end to answer some of the questions. So if you guys think of any questions as I'm speaking to you, just type them in the chat and Tyler can read them, and I'll be happy to answer them, or as many as I can at the end. Do that. So let's talk about the benefits of the solo 401k. Why is it known as the ultimate retirement plan? Well, number one, the contribution limit. The contribution limit is significantly higher than an IRA. It's actually 10 times higher. With an IRA, you can put $6,000 a year. With solo 401k, over $60,000. I mean, think about that. If you and your spouse are in the business together and you generate good income, and you together set up a solo 401k plan, and each one of you participate, and you attempt to maximize your contributions, you can potentially shelter over $120,000 of your income from taxes. I mean, just think about this. If you're dropping your taxable income by $120,000, for sure that's going to drop you in a lower tax bracket, maybe two. And so you're going to be in a lower tax bracket, paying under significantly lower dollar amount. Your taxable amount, dollar amount is going to be significantly less. So it's not uncommon to save $20, $30, $40,000 plus possibly if you choose to maximize the contributions with the solo 401k plan. So it is just forget about everything else. It's just a great tax shelter. Just this one benefit is worth it. Next is it has a loan feature. It actually allows you to borrow up to $50,000 per participant. So if there is a two participant like husband and wife, then you each can take a participant loan potentially. So you can borrow up to $50,000 or 50% of the balance, whichever is less. The loan can be taken for any purpose. Now, it's very nice feature to have, and it's like you're creating your own bank that you can tap in for any purpose, but just you don't want to abuse that, because remember, it's your retirement dollars. and you want to maximize the investments. You want to maximize the growth of these funds so that you can achieve that tax deferred growth. And if you're taking a loan, you're depleting that. So you need to be wise about this. You just don't want to borrow and go buy some toys with that. But there are certainly legitimate reasons to take a loan. And please note that if you have an IRA, it's not possible to take a loan from an IRA. If you have an IRA and you do need cash and you wanted to tap into your IRA, the only way is to take the distribution. The distribution is subject to taxation, and early distribution is subject to penalties. That's going to be very painful. It's going to bite you significantly if you're taking a early distribution from an IRA, because taxes plus penalties, it's not uncommon to pay 40+% to Uncle Sam. Next is the ability to make ROT contributions. Each solo 401k plan that we establish comes with the ROT provision, allowing you to make ROT contributions or making ROT conversion. So you can actually take your pre-tax dollars in the 401k, you can pay the taxes now and convert them into ROT. So the concept of paying the taxes on the seed rather than the harvest. So it's a great strategy. And the beauty of this is that there is a flexibility. You actually have the ability to contribute to ROT 1 year and not to do it next year, or even split this amount between your pre-tax contribution and a ROT. Next, checkbook control. It's very cost-effective plan because there is no custodian and there is no middleman. It's very simple to maintain, and it's very cost-effective. And if you have a spouse that is also involved in the business, you essentially can double the benefits because your spouse can participate at no additional cost. And last but not least, it is exempt from UDFI, which stands for unrelated debt finance income. This is the income that if you decide to purchase an investment property in an IRA, the portion of the property that is financed, if you use leverage, if you finance, which by the way, you must use non-recourse financing to do so, but portion of the income that is derived from the leveraged portion of the property will be subject to UBIT tax, or unrelated business income tax. Please note that 401k is exempt from UDFI. Okay, so if there is a property that you own in the 401k that is leveraged, there will be no tax consequences, unlike with an IRA. So that's pretty big. So ultimately, if you look at all of them, it's very clearly. I'm actually going to show you a slide later on that compares them side by side. The bottom line, a self-directed IRA or a solo 401k, both of them allow you to have true diversification. Credit for this cartoon goes to my daughter. Many years ago, she helped me by drawing this cartoon that man holds the basket, which represents stock market, and all the eggs are, the bottom fell off, all the eggs are broken. And wife says, I thought our investments were diversified. Well, if you have all of your eggs in a single basket, then they're not diversified. You might have mutual funds, which gives you a degree of diversification, but it's still one asset class. To receive or to achieve a true diversification, you can only do that with a self-directed IRA or 401k, which allows you to invest in virtually anything. And Ecclesiastes 11:2 says, divide your portion to 7 or even to 8, for you do not know what misfortune may occur on earth. So some words of wisdom there. Definitely something to implement. And self-directed means unlimited investment choices. Again, you can invest in real estate, single family or multifamily. You can invest in precious metals. You can do hard money lending. You can invest in trust deeds. You can invest in private businesses, tax liens, and on and on and on. Now let's take a look and let me take a couple slides and explain you about the limitations, and because it's very important to understand that there's a lot you can do, but there are certain limitations that you need to be aware of. And Internal Revenue Code section 4975 spells out prohibited transaction rules for IRAs and 401ks. And according to these rules, you cannot use your IRA or 401k to invest in collectibles. And collectibles can be collectible coins, collectible stamps, collectible artwork, collectible wine. Anything that is considered collectible, you cannot use your retirement funds to invest in. You cannot also invest in the S corporation, because to invest in the S corporation, you have to be a physical person. Only a physical person can be a part of the a shareholder of the S corporation. You can invest in the C corp using your retirement account. Now, a lot of people misunderstand this and think if they have a S corp, single member S corp, they cannot set up a solo 401k. No, if you have S corp, that's your business and you have no employees, you can set up a solo 401k. You simply cannot use your solo 401k to invest into another S corp. That's what it means. And then you cannot use your IRA to invest in life insurance policy or life insurance contracts. Now, on top of that, this section explains that there is such person defined as a disqualified. And disqualified, essentially, it's immediate family members and the account owner. So if you, it's yourself, your spouse, your parents, grandparents, kids, grandkids, and their spouses, also investment advisors, and those that have fiduciary responsibility to the plan. And also any business entity in which any of these people listed above own 50% or greater interest. So you cannot use your IRA or 401k to engage in a transaction that involves any of these people. Now, let me give you some examples. So the prohibited transaction, if it happens in an IRA, it disqualifies the entire IRA. If it happens in a 401k, it can be corrected. And if you did not correct that, then it will disqualify only a portion of the 401k that is involved in that transaction. So rules for the 401k are more lenient. But it is a sale, exchange, or leasing of property between a plan and disqualified person. A question that every once in a while someone comes and asks, I do own this rental property. I owned it for a number of years, 10, 15 years. I don't want to sell it. I don't want to get rid of it. Can I put it in my 401k? The answer is no, because that will be a transaction between you, which is disqualified person, and the plan. So you essentially be selling that to the 401k, and that's prohibited. That property cannot ever be placed in your 401k plan. Next, lending of money or other extension of credit between a plan and disqualified person. So for this reason, the loan, if you buying an investment property using a financing, it must be non-recourse because you're not allowed to provide a person guarantee. You're also not allowed to provide any goods, services, or facilities between a plan and disqualified person. A good example will be a real estate agent setting up a 401k and then wanted to actually represent or be the agent in the transaction for the 401k. That cannot happen. It will be actually a double prohibited transaction because you will be providing services to the 401k that is prohibited, and then it will violate the next. One of the next is receiving compensation, because when you receive a commission, you receive commission in a relationship with the transaction that involves your plan. That's a violation. Next, transfer to or use by or for the benefit of a disqualified person of the income or assets of the plan. A good example here will be buying a vacation property at the beach using your 401k or an IRA, and then you decide you're going to go and stay there for several nights. That will be prohibited even if you pay market trend, because you're personally using that asset that your 401k owns for your own benefits. That is prohibited. You are not allowed to ever stay in that property. Next, any act by a disqualified person where he deals with the income or asset of the plan for his own interest. You must remember, you control the 401k, but it's not for your benefit. It's always for the benefit of the 401k. So you personally cannot benefit from any way. And that's the last one where I said where you will be receiving a commission. So receiving any consideration for your own personal account in connection with the transaction. So that will be violation. Again, being a real estate agent under transaction that involves your 401k will be double violation of IRS rules. Now, buying real estate inside of an IRA or 401k is fairly straightforward. All the income and gains are sheltered from taxes. They're tax deferred until future. You pay taxes at the future rather than now, which then your investment will be growing slower. But if you continue to invest in tax deferred method, it's growing much faster. And if you use Roth, it's going to be tax free. And just as a reminder, all the income must go back into the 401k or an IRA, and all expenses directly related to the investments that your IRA or 401k own must be paid from the account. The question often comes up, can you finance the property? And as I mentioned, yes, you can. You just cannot provide the personal guarantee. For this reason, the loan must be non-recourse. Property is the only security for the loan. Typically, non-recourse lenders require 30 to 50% down. Property must have sufficient cash flow to so that there is enough income left to pay the expenses. Lender also require reserves, typically 10% of the purchase price. And inside of an IRA, it will trigger UDFI tax, but 401k is exempt from that. There's actually only a select number of banks and lenders that offer this, and Marsh Reddick is at the top of that list. Marsh Reddick offers non-recourse loans to IRAs and 401ks and have very attractive programs, so you should check that out. And here is my side-by-side comparison of these three vehicles. As you can see, all of them allow you to invest in alternative investments, but you do need a custodian for an IRA and you don't need custodian for a 401k. So it's simpler. Checkbook control is offered by solo 401k and a checkbook IRA. With custodial self-directed IRA, which is the first option, you have to go through the custodian for each transaction. Now, there are LLC fees for checkbook IRA, and that depends on the state of the LLC formation. You can only take a loan from a solo 401k, and solo 401k also exempt from UBIT tax on leveraged real estate. the contribution limit, maximum limit, these numbers do include catch-up. That's for this year. So it's 6,500 before the catch-up, 7,500 with the catch-up for an IRA, and $66,000 before the catch-up, and 73,500 including the catch-up. And the catch-up kicks in for those people who are 50 years of age or older. So as you can see, solo 401k allows you to, the contribution limits are 10 times higher. Solo 401k also has a built-in ROT feature, but solo 401k is not for everyone. It does require legitimate self-employment activity or business with earned income and no full-time employees. So as you can see, solo 401k is not for everyone, but it's full of features. It's the most powerful, and it's no-brainer if you're eligible for it. And even if you're not, if you have easy way to qualify, it's worth a little bit extra effort to do so. And here is the slide for the consultation. I'd like to extend that offer to all of you on this call today. Thanks for sticking with us. It's been a lot of information, and I had to kind of rush a little bit through the slides. And we'll take questions here in a moment or two, but it's simply impossible to discuss every possible scenario and answer every possible question here on the webinar. That's why I do offer that complimentary consultation where we can set 15 minutes aside and just talk about your specific situation and answer your questions. Again, this is my contact information. Feel free to email me questions if you don't want to ask them here publicly. But like I said, it's probably the best to discuss them one by one over the phone. We are almost at the end of the hour, but maybe we can take a couple of questions if we have any. Tyler, I'll let you handle that.
Thank you so much, Dimitri. We appreciate it. And yeah, we got a lot of questions tonight. So thank you everyone for being so interactive with your questions. We appreciate it. I got a lot of the same questions from a number of people. So I'm going to have Dimitri answer those so that we can answer the most in the couple minutes we have left. But I've got everyone's contact information here. I will make sure that I get you answers to all of your questions when I follow up early next week. So Dimitri, here's a question asked by Victor, and I had a couple other people ask this question as well. Victor is wanting to know, does a checkbook IRA work with a multi-member LLC? He typically invests with partners.
Checkbook IRA, the way it's going to be set up, just like I explained, your checkbook IRA will have a single member, and that single member LLC will be your IRA. But your single member LLC can partner with other people, so it can be individuals or it can be another LLC. So if you choose to form another LLC for a larger property, let's say you buy in a larger project and you have several partners and you choose to set up a separate LLC, you can. And in this case, your checkbook IRA will be one of the members in that other LLC. Certainly possible.
Excellent. Thank you so much for answering that, Dimitri. Appreciate it. And a number of people here have this question. I got about 6 of these. And this is a very common question, so I would appreciate if you could go over it. We have a number of people here who have W-2 jobs, but also do their own businesses on the side. Can you, having a W-2 job and an employer-sponsored 401k, can you also open up your own solo 401k with your side business?
That is a very good question, Tyler, and the answer is yes. You actually can have multiple 401k plans. So if you do have a full-time W-2 job, whether it offers 401k or not is irrelevant. And whether you have a job or not, that's also irrelevant. What counts for the solo 401k, let me remind you all that there are two eligibility criteria that you have to meet. Number one, you have to have a presence of legitimate self-employment activity or business income that is active. And number two, you cannot have full-time employees be working for you. As you can see, having a job is not there. So it's really irrelevant whether you have a job or not. But the answer is yes, you can have a full-time job and you can have a side gig or side self-employment. And we actually have many, many clients. I'd say maybe about half of our clients who have solo 401ks, they're just like that. They do have full-time jobs, but they also have some kind of a side business. It can be maybe you're flipping a property, just one property a year. You do that just to generate some income so that you can invest. You can do that. Or maybe you have a job and you just on maybe one weekend a month, you go and drive Uber to also generate some income. And that is legitimate self-employment activity. It's certainly possible. You can have a solo 401k if you also have a full-time job. That's definitely yes.
Excellent, thank you. And we'll do one more here and then we'll let everybody get on their way. Dimitri, Stephen has the question, does the solo 401k get a tax benefit from the paying of mortgage interest?
Remember, solo 401k is a separate legal entity. And when you own a rental property and you pay the mortgage, you're able to deduct the mortgage off of the income that that property generates, or perhaps your other income. If you do it inside of a 401k, that has nothing to do with you. 401k is a separate legal entity, and 401k does not actually pay taxes on the income. So all the income is sheltered. So there is no mortgage deductions for you personally because that's not yours. Now, if you have an IRA and you have a property that is financed, remember I said that portion of the income will be subject to UBIT tax. So in this example, if you have an IRA and there is a leveraged property, then you can use the mortgage interest to offset that income and pay less taxes. So in a case of an IRA, there is a tax benefit, but it's just for IRA specifically. It's confined within an IRA. There is no personal benefits to you.
Excellent. Dimitri, thank you so much. And I apologize for everyone's questions that we haven't gotten to this evening. There's a lot of them in here, but I'm going to make sure that we follow up with each and every one of you to make sure that your questions get answered. Again, everybody, thank you so much for taking the time to join us this evening. Dimitri, thank you. We appreciate your partnership. Like I said, Dimitri helps hundreds of our clients every year utilize IRA and 401k to invest in real estate. And it's really helped a lot of our clients grow their net worth with those retirement funds. And so for that, Dimitri, we greatly appreciate you and your wisdom. Thank you, everybody, again, so much. I'll be reaching out. And if anybody has any questions, please feel free to contact me or Dimitri in the meantime. Tomorrow, you will all be getting a recording of this presentation with all the information in it. I look forward to speaking with everyone. Thank you guys again and have a wonderful night. Dimitri, thank you so much.
Thank you for joining us. Thanks for the opportunity.